I'm Venetia Rainey and this is Iran the Latest. It's Thursday, 13th of August 2026. On today's episode, how the Iran war is reshaping the global economy and why the oil markets haven't seen more disruption. Hint, the main factor is China. Plus, the country suffering the worst impact from the closure of the Strait of Hormuz and why this war goes against America's core strategic interests. Well, it's a very quiet day today, not much news around, so we're going to take the opportunity to take a big picture look at the economic impact of this war, because we regularly mention it glancingly on the podcast, but it's absolutely huge, so I just want to use this episode to do a deep dive. To help dissect it all, I'm very happy to be joined by our world economy editor, Ambrose Evans-Pritchard. Ambrose, welcome back onto Iran the Latest. I want to start with oil, as it's really at the heart of the economic impact that this war is having. And we had a reasonably dire warning, at least it sounds dire to me, and maybe you can do a sense check as to whether it's very serious. A warning yesterday from the International Energy Agency. They said, although the market is projected to return to surplus towards the end of this year, risks remain substantial and the urgency of reopening the strait has increased as previously available inventory buffers are rapidly depleting. That sounds very serious, and yet oil prices are around $85 a barrel. It's higher than before the war, but way down from the $100 barrel peak that we had earlier in the war and during the beginning phases of the Ukraine-Russia conflict. Why? Why is this? Why haven't prices gone more berserk?
Well, the prices didn't go up as much as a lot of people feared because China crushed its internal demand by 5 million barrels a day, which nobody thought was possible. And that's probably not sustainable for a very long time. So when they come back into the market, they're going to start putting pressure on it again. The other thing is that so much refining capacity has been knocked offline, both in the Middle East and in Russia, crucially, about 4 million barrels a day, that has basically reduced demand for oil by almost 7 million barrels a day, which is a lot. You're talking about huge numbers here. So, we don't actually consume oil. We consume diesel, petrol, jet fuel, naphtha, these other products. That's actually what people feel. And those are trading at pretty high prices. The so-called crack spread between the oil price and the refined product is at kind of record levels. I mean, really exploded, tripled, quadrupled in Rotterdam, in New York. So it's hitting the United States too. So although the oil price may look relatively well behaved, the actual, products that keep the global economy humming are very expensive, and they're just about as bad as they were in 22 at the height of the beginning of the Ukraine war. And basically, the thing you have to remember is the whole of the American farm economy, transport system, or the trucking system anyway, runs off diesel. And those prices have gone up 50, 60%. So, there are going to be knock-on effects through the whole supply chain of the economy for a long time to come, just from what's already happened. And, it could get a lot worse because the war hasn't ended. The world has lost about 1.6 billion barrels of oil supply that it wouldn't otherwise have got. It's been able to deal with that by massively reducing inventories. But the US Strategic Petroleum Reserve is down at basically its minimum safe levels. You can go a little bit low, but not much lower before you start damaging the structure of it. The US massive commercial inventories at Cushing in Oklahoma are basically, they're scraping the barrel. There's just about nothing there left.
Scraping the barrel, literally.
Yeah, I mean, literally. So you're in this situation where the whole system is you're in a kind of bad equilibrium. It's kind of stable, but you've reached the operational stress levels of the whole international oil market. And if something else goes wrong now, it can get really nasty, actually. And of course, the Iranians know this. So, they know that all they have to do is push this one more time, and they can trigger some real trouble for Trump in the midterm elections.
That's fascinating. So we've all been looking at slightly the wrong number, a slightly too rosy number for the underlying picture. The Russian refineries that you mentioned, we know that Ukraine has been attacking those, and we know that America has been pushing on Kyiv to stop attacking quite so much because it's been such a useful way to release pressure on the system, as you say. But the China element that you mentioned is fascinating and a bit more complex. Can you unpack for us how China has been able to reduce its need for crude oil by such a staggering amount? What is it doing?
Well, its previous demand figures were inflated because it was buying a lot of oil to fill its strategic petroleum reserve. So unlike the United States, which went in with half depleted strategic reserves, China had massive reserves. It was basically preparing, most people think, for potential conflict over Taiwan. But it's proved to be very useful for this conflict. So they probably had 1.5 billion barrels tucked away, which is massive. And it's sort of allowed them to kind of weather this. So they immediately stopped filling it up. So that freed up probably maybe as much as 1.5 million barrels a day, but I mean a lot. They then had another side business where they were importing oil and then refining it, processing it, and then re-exporting the oil around the world. So they stopped that, and they imposed an immediate embargo on exports. So that cut another slice. And then they did all kinds of things internally, which kind of we don't really fully understand yet. It seems like basic demand management, essentially. I think when people come back and look at this in the future, they'll regard this as a critical turning point of the whole history of the oil markets globally.
Yes.
Because nobody thought that China had this ability to suddenly to switch off demand like that. So it's now replaced Saudi Arabia as the essential regulator of the global oil market, because Saudi Arabia used to increase supply or cut off supply depending on what price it wanted. Now China can regulate it by just turning off demand on the other side of the equation. And that's come as a shock to everybody. And I make another point. When we come out of this, I think people realize that actually the world probably doesn't need quite as much oil as had been thought. And we're going to go straight into a big, big glut when all this is over, because structurally there's too much oil production, which has all kinds of implications, for example, for our debate over drilling in the North Sea. Is it really actually going to be viable, even if you open it all up for further drilling? I mean, how much is going to be extracted? We can have a debate about that.
You mentioned China essentially replacing Saudi Arabia in terms of being able to influence the oil market. Does that mean the end of OPEC? Does that mean China is the new OPEC? OPEC is obviously much bigger than Saudi Arabia, but I'm just wondering if that releases the grip that Gulf has had on that.
The new OPEC is kind of OPEC plus Russia plus Kazakhstan, and
right.
So it's already sort of become bigger. The fact that China can do this takes away quite a bit of their leverage in the market, I'd say. It's kind of chalk and cheese. So, but it is the new big kid on the block, basically, in the oil market that we hadn't fully understood before. But you don't have to go that far out, 3, 4, 5 years, and you'll be seeing quite a big reduction in China's oil imports. I mean, already essentially it's flat. Flat, I think, may even be slightly declining. So we reach this plateau, oil demand is not increasing, and I think it'll probably go down a pretty steep curve. It'll mostly be used in the future for petroleum products, for plastics, for things like that, but not for transport, except for jet fuel, which you can't easily replace.
You also mentioned the US Strategic Petroleum Reserve falling. I think it's now down to its lowest level since January 1983. That's according to data that was released by the Department of Energy on Monday. The US has drawn about 172 million barrels from those reserves since March as part of a coordinated agreement with the IEA to release barrels to help calm the oil markets. How significant is this dwindling of the US Strategic Reserve? You often see posts going around on X saying, oh, the clock is ticking for America to make a deal with Iran. Is that right? It doesn't sound right, but you tell me.
Well, it is one component. Obviously, it was very unwise to go into a war in the Middle East the archery of the global oil system without having first filled the Strategic Petroleum Reserve. It could have been, I think it can take about 750 million barrels or something. I think they only had about 450 or something. I don't know what it was. But
and now it's at 298, just to give our listeners a
298,
sense.
okay,
Yeah,
well, there you are. I don't know whether some people say the safety level is 300, some people say it's sort of 270, whatever, but
Okay.
you're getting close to it. The point is they can't do a second round of this.
When you say safety level, what does that actually mean? Like the physical infrastructure starts to be damaged, or what's the risk?
Yeah, I mean, these reserves, you can't use them that often. You can only use them 4 or 5 times before you start degrading them chemically. And if you kind of keep tapping into them, you reduce their sort of shelf life. And there comes a point when it gets too low, the actual volumes get too low, that you damage the sort of chemical structure of it, if you like. Okay. And I mean, this isn't my field, but they basically can't go down to 100. I mean, without wrecking the system.
Right.
So maybe they can do another 50, maybe they can do, million or something, but I mean, 60 million, I don't know. But that's not going to make a blind bit of difference, frankly, to this global, picture we've got. Talking about global oil demand about 304 million barrels a day. This is really quite small beer. I think the bigger stuff is the commercial reserves in the US, and they're also very, very low. And then you've got these other reserves all around the world. We've got OECD countries all have their own strategic reserves. But those are also quite diminished. And the Japanese and the Koreans have released a huge amount of their proportion of their reserves, probably rather unwisely. I don't think the Japanese have paced it very well. I mean, they do have huge reserves, but they're no longer huge reserves. So yeah, I mean, we can dip into it, a bit more. But if this goes on for 6 months and there's no resolution, so what's Trump going to do?
And meanwhile, things are changing on the ground in the Middle East. We're seeing, a global pipeline investment boom, more companies offering shipping routes across the Arctic to avoid the Bab el-Mandeb Strait and the Strait of Hormuz, I saw. But I just want to focus on the oil. We've seen, for example, Saudi Arabia increasingly relying on its east to west pipeline to go to the Yanbu port in the Red Sea. Now that the Houthis have increased attacks and announced a maritime blockade on Saudi Arabia, they're increasingly trying to get it out to, I think, the Mediterranean via the Samud pipeline across Egypt. Oil exports from Egypt's Mediterranean port have doubled to about 2.3 million barrels per day in August compared to 1 million barrels per day last month, according to Kepler, and the majority of those exports are Saudi crude. So we're really seeing these big players trying to figure out other ways to get their products out, aren't we? We're seeing the reality changing on the ground in a way that suggests that people think this will probably be a semi-permanent problem.
Yeah, I mean, the Saudis have done, you've got to give them credit. They've done a pretty good job of switching a whole lot of supply through the East-West pipeline. Probably there was some already going through that, so they're probably up to about 6 million barrels a day, maybe more. But there was already some going through that before, so it's not addition. So probably they managed to get maybe 4.5 million barrels a day that they lost with the Strait of Hormuz out that way. But the Houthis have attacked that port before. They have the capability of reaching it. So if that little spat continues to escalate, then the Yanbu port becomes a target too. The pipeline itself potentially a target. I mean, it's pretty well defended. So it's not secure. I mean, it's worked until now. If the US escalates and it launches another big round of a bombing of Iran, and especially if the US starts hitting Iran's energy infrastructure, Iran will retaliate by unleashing everything it can against all the energy infrastructure of the region, and probably mobilizing the Houthis. I know they operate independently and they've got their own agenda, but they may join in much more aggressively than they have so far and go for the port of Yanbu, and then we are in real trouble, because you can sort of muck around with these various different things, but at the end of the day, you lose the Strait of Hormuz and and the Red Sea, and you're in real trouble. You're seeing these spillover effects everywhere. You're seeing it in the Panama Canal, for example, now, because the whole global system is so dislocated. There's more oil and products going from the eastern United States or Texas through to California or into Asia. The canal is jammed up. I think the fees they're charging now have gone up something like 18 times in a year. I mean, some
Wow.
colossal increase. I mean, it's $1 million a passage for some of these ships. I mean, this is, and also the Panama Canal itself has got some problems because of the droughts. So they may have to reduce the volumes going through there. So it's right, the same problem we have on the Rhine River. So the system's under a lot of stress from lots of different angles. And when you have a crisis in the Middle East like this, it spills over into all kinds of unexpected places. And that's kind of what we're seeing. And all the delayed effects of this have yet to hit economically.
And I want to come on to that economic impact in a second, because we've had some data from the UK just today. But first, just staying in the Middle East, one of the countries that has been particularly badly affected is Iraq. And this week, the Iraqi government put out a bunch of statements basically insisting it's got plenty of reserves and ways of paying salaries for state employed people for the next 10 to 11 months. And that's really significant because I think something like 2/3 of working age Iraqis rely on the state for their livelihoods. And just to give our listeners a bit of context, so almost all of Iraq's oil, somewhere between 80 and 90%, is shipped out of the Al Basra oil terminal normally, because it doesn't have any alternatives, and so that would go through the Strait of Hormuz. But obviously the blockade has completely changed that. By May, crude exports from Iraq were down 97% year on year. I mean, that is a cratering. And this is really troubling. Iraq is a classic petro state, right? Somewhere between 85% and 90% of its national budget comes from exporting oil, and this feeds straight down. As I said, 2/3 rely on the state for their livelihoods, and these salaries are now being delayed. So we had a couple of protests earlier this month from people who are concerned about their not being paid. Iraq is now looking to export more oil through a Turkish pipeline. It started trucking some oil out overland routes, not very efficient. And it's also trying to revive a pipeline through Syria into Lebanon. But these aren't short-term solutions, are they? I mean, it points to the way that these petro-states in the Middle East are trying to compensate, but they won't be able to do it fast enough to keep up with the ravaging, frankly, effects of this conflict. And I guess we'll start to see much bigger problems towards the end of this year if the war doesn't wrap up soon.
Yeah, I mean, it takes a long time to build pipelines, and this is. Where do you get the steel from? Where do you get the engineers from? I mean, these things are huge enterprises, I mean, especially across large expanses of desert. No, I mean, it's absolutely terrible for Iraq. This is the collateral casualty of this war. We could basically destabilize the country again completely. And I mean, they're completely, essentially innocent bystanders. They probably suffered worse hit than anybody else, and in some respects, in worse shape than Iran. Iran has been able to get a lot of its oil out. In fact, in these various sort of intermittent, sort of on again, off again war, they've been able to get a lot of oil out, and they've shown, by the way, in the past that in 2019, for example, they were able to withstand a period when they were hardly getting any out for a long time. And I think the assumption among many people in Washington is if they put more economic pressure on Iran, it'll kind of crumble from the inside. I think is wishful thinking. And I think the regime has got a new lease of life as a result of this war, which is one of the great ironies of it all. Kind of the war saved a dying regime. It was kind of losing its credibility among the Iranian people. An external attack has sort of, had a rally around the flag effect, and now you've essentially ended up with a military regime rather than a clerical regime, and it's one that's very tight knit, a very hard line, and absolutely determined to develop nuclear weapons.
Yeah, it's a pretty damning assessment. I think the only point in which I'd disagree potentially is that the Iranian regime is now more determined to seek nuclear weapons. I can absolutely see why there might be more of a motivation, but I don't think we've heard them really talking about it yet. And there's still a lot of internal divisions between the sort of clerical part of the regime and the military part of the regime. We'll see where sort of power truly settles, I guess, probably after this war is over.
I'll just make one point. If people say, well, they don't need nuclear weapons anymore because they've got the Strait of Hormuz and that's proved to be a much more potent and usable weapon. Well, it is now, and it will be for 5 years. But by the time all these other new pipelines are built, it will be a much diminished weapon. So they kind of need to keep this going on two fronts. I mean, from their point of view. So I can see they have a very, very strong motive to keep going with nuclear weapons, because they wouldn't have been attacked had they had nuclear weapons in the first place. And I think the countries all over the world have looked at this and said, well, if you want to avoid being attacked out of the blue like this, you better have nuclear weapons. So we could get another consequence of this war is a proliferation in several countries. I might add, even including possibly Korea and Japan, who feel very unsettled about the nuclear umbrella. I mean, for lots of different reasons. But the added new reason is that all these weapon systems were removed from that theatre
American weapon
to
systems,
deploy in the Gulf,
yeah.
Leaving them much more vulnerable. And I don't know where Taiwan sits in this, but I would have thought they must be pretty alarmed.
You mentioned the Iranian economy and how you don't think those hoping for the Iranian regime to be squeezed will work. We've had the US blockade reimposed. Do you see any signs that the Iranian economy is close to being on its knees, or do you think it just doesn't really matter either way because the regime doesn't care how impoverished its people are in it?
I mean, in my career, I've sort of spent times in countries where they were sort of bankrupt and in theory, involved in wars, and you would think, oh, how can the economy continue in these circumstances? Because if you look at any of the normal sort of metrics, it's just untenable. And yet in these situations, they just keep going. And so I'm kind of very suspicious of the argument that they're crumbling. I mean, it's quite a large internal diversified economy. They've got these porous borders all over the place. Well, I mean, large borders with countries that are not hostile to them. There's a lot of stuff can get through. They're getting probably a lot of help from China in different ways. So I don't really see the mechanism by which an long economic embargo brings them down before it sort of brings down political consensus in the West and in the United States. It would seem to me that the political consensus in Washington for this war will break down before the Iranian economy breaks down.
Yeah, I think that's probably a fair assessment. One of the countries that is starting to see the impact here in the West is the UK. So we had some data out today showing economic growth here in Britain has slowed in the last few months. The economy grew by just 0.4% in the second quarter of this year, down from a not especially impressive, to be honest, 0.6% in the first quarter. And Andy Burnham has been warned that the UK economy could grow by as little as 0.3% in 2027 if disruption in the Strait of Hormuz continues. How dire is this?
Well, I don't think it's dire at all. I think it's quite good. I mean, 0.6, 0.4 in a region, Europe is it's a sort of comatose economy. It has been for ages, very, very low growth there in our sort of biggest trading area. So actually we're doing pretty well.
Okay.
And there's been this pattern for quite some time where the big, IMF and the OECD and others, predict we're going to be one of the worst performing economies, in the developed world. This has happened several years. And then it turns out actually we're one of the better ones. And it's sort of happening again. In terms of the fallout from the Iran war, there were some predictions. I mean, the IMF came out with some predictions that we were going to be one of the worst hit from the energy shock, which I completely disputed at the time.
Okay.
I think it's incorrect analysis. They hadn't taken on board the degree to which we've already lowered our dependence on imported gas, for example, particularly. you go back to the Ukraine war in 2022, roughly 42% of our electricity was generated by gas. And now you're talking about 27%. So that's a big, big fall. We still use it for heating, but luckily we're in the middle of summer, so we don't need much gas for heating. We'll face that problem in the winter.
Yes.
So we that's another thing. We have an advantage, which we actually produce. I don't know what the latest figures are, but it's maybe 35 to 40% of our own gas we produce in our own waters. Plus we get all this pipeline gas from Norway. So we're not as badly exposed as some. The rest we get in is shipped liquefied natural gas, LNG, from the US and not from Qatar now, normally from Qatar. The US has stepped in and has replaced it essentially.
So the UK not too badly affected. Which countries in the West, we've spoken a bit about America, but are there other countries that are being badly affected by the Iran war or will be in 6 months' time if things continue?
Well, in terms of the crack spread on all these products like diesel and jet fuel and so forth, that's something we all share. America is in exactly the same position as we are. The crack spread in New York Harbor, the benchmark there, and the crack spread in Rotterdam is almost the same, and it's huge. So the diesel price, we're getting the same shock. And if you look at the IATA publishes this weekly jet fuel index, and the price is pretty similar everywhere. It doesn't matter whether you're in Far East or whether you're in America or in Europe, you're getting hit by massive jump in jet fuel costs. So we're all sort of feeling it through these networks. In terms of the actual macroeconomy, Germany's suffered a lot. It's got quite a high energy dependency. Its industries has a lot of high energy usage industries, heavy industries, chemical industry, all these things, steel, and so they've kind of taken a hammering, and they've been in a depression for 5-6 years, much worse than Britain. And in my view, the Germans have handled it quite well, actually, given what's been thrown at them. They've had so many hits all at once. The car industry's been hit by the China threat. The whole dependence on Russian gas just blew up in their face. It's one thing after another. So they've really suffered a lot. And of course, the British and German economies are very heavily integrated. So there's no Schadenfreude in this. They've suffered so much. We get pulled down as well. I would say the Japanese are got a problem here because they import all their fossil fuels, and they also have a lot of sort of heavy industry and a lot of kind of reliance on kind of oil for petrochemicals and so forth.
Just want to finish by asking you about an excellent piece that you wrote for the Telegraph, which we'll link for our listeners and viewers in the show notes, about Pulitzer Prize-winning American historian and journalist Barbara Tuchman's March of Folly. And for those who are not familiar with the book, it looks at sort of 4 major instances of government folly in human history, from the Trojans to the Americans in Vietnam. And you say that if she was alive today, she would have to add another chapter. Donald Trump's excursion in the Gulf ticks all of the boxes of her timeless book. Why?
Well, her book, the chapters that really interest me in her book, one of them is about the Renaissance papacy and how all the errors they made that led to the Protestant Reformation. Another one was how Britain lost the Americas when it could so easily been avoided. And another one, another major chapter was the Vietnam War and how America sort of blundered into this thing on a whole lot of false premises and got dragged deeper and deeper and deeper into it. But what's common to them all is they were acting against their own strategic self-interest at different stages, out of kind of stubbornness, out of wooden-headedness, out of an illusion of invulnerability, out of hubris. And they didn't understand how the other side was thinking. And I think this is been the fundamental error with Iran. They just couldn't get inside the heads of who they were dealing with there. And Trump clearly thought it'd just be another Venezuela and it'd be a quick publicity stunt and victory and go home. I mean, that was an extraordinary misjudgment. And and furthermore, we now know he was warned by the chairman of the Joint Chiefs of Staff, Dan Kane. Be careful because we don't have that many munitions, and we've got to be careful how much we use on this. I mean, essentially, America no longer gets its energy from the Middle East. It doesn't need it. It's the world's biggest producer of hydrocarbons. It's a net exporter of oil. It's a large exporter of LNG gas. So what was it doing there? I mean, it's essentially a secondary theatre. The main contest is in the Far East, and the other one, in my view, but not in Trump's view, is in Europe with the NATO flank and Russia and all the dangers there. So he's denuded the defences on both flank and both of these theatres that are critical for this secondary war in an area where America doesn't have energy and economic interests directly, and it wasn't necessary. There was no reason for it. I mean, I don't think anybody in strategic circles seriously believes that Iran was just about to develop a nuclear weapon. I think that was just a story put out.
Yeah.
It was essentially a contained problem. It was a management problem. It's the kind of problem that the British under the British Empire had dealt with over the centuries. Lots of these things are contained problem. You don't have to go in there and bomb it. And it was just completely unnecessary to launch this thing. And I think I'll just make one point here, which if you look at the latest Pew Survey, yes. The US Pew Surveys, which do survey opinions around the world, and it's how they view the United States and how they view China as in the latest one. And if you look at the charts, how China has now displaced the US as the country that's more trusted, seen as a more stable force in the world, not only in countries where you might expect it, like sort of Indonesia and but also in a lot of allied countries. Yep. China is now more trusted than the United States, and by quite large margins, actually. I mean, you can look at Germany, the Netherlands, Italy. I mean, by a wide margin.
And that crossover has happened in the last year. I was looking at last year's Pew Survey on exactly that. That has happened in the last 12 months.
I mean, if I was an American diplomat and I was looking at that, I would say, Houston, we have a problem.
Ambrose Evans-Pritchard, our World Economy Editor, thank you very much for joining us on Around the Latest.
Thank you.
That's all for today's episode. We'll be back again tomorrow. Until then, goodbye.